Another prominent developer in the Greater Toronto Area is struggling financially. Reminiscent of the receivership at the One that I had spoken about this past October, this involves a smaller amount of money when compared to the One's $1.6 billion debt, but the impact is significant, affecting a huge number of units across the GTA. Vandyke Properties, founded by John Vandyke in 1979, is now in some financial trouble. They are known for their single-family detached and semi-detached neighborhood projects, but they've recently expanded to high-rise condos and have taken on substantial debt to do so. Spiking construction costs in materials, labor, and development fees, paired with high interest rates, has made it look like Vandyke has bit off more than they can chew. Currently, Vandyke owes over $203 million. Their lenders are pushing for 5 different Vandyke developments to be put into receivership. That amounts to 1,757 unbuilt homes. Approximately 47% of those homes have already been sold to buyers. The first project that is facing receivership is Uptowns. Uptowns is a townhouse development in Brampton set to contain 340 units. 329 of those 340 units have already been sold. The project launched in 2017 and was due to be complete in December of 2020. The initial delay of the completion was due to the global pandemic, but as other developers caught up from the delays caused by the pandemic, Vandyke really never fully recovered. They just couldn't keep up with the rising costs of materials and labor, and this led to a lawsuit being filed against them by subcontractors for unpaid work. The project now has over $267 million in mortgages and liens registered against the property. This means the developer owes over $267 million to others, including financiers and contractors. The second project facing receivership is Phase 2 of Uptowns. Phase 2 consists of 200 new townhouse units on a piece of land adjacent to Phase 1. They started selling just last year, and so construction is yet to start. 100 of the 200 units are already sold. The third project facing receivership is The Ravine. This project started selling last year, and the plan is to build 39 semi-detached homes backing onto a ravine on Waterhouse Crescent in Mississauga. These are meant to be higher-end new-build homes starting at $1.8 million. So far, only 6 have been sold, and there's no certain completion date for the homes. The fourth project facing receivership is Lakeview DXE Club, which I believe is supposed to be a cool way to say the exclusive club. The project is 2 boutique-style condos at Lakeshore and Dixie, right on the border of Etobicoke and Mississauga. Sales started last year, and it's estimated that nearly all of the 396 units have been sold. The fifth and final project facing receivership is Grand Central Mimico, which is located off of Royal York Road and the Gardner Expressway in Etobicoke. This is a huge project with towers being built over 4 separate blocks of land. The current phase consists of 2 towers that are set to contain over 700 units, and they started selling in spring of 2021, and it sold out very quickly due to the location and hype surrounding the project. Vandyke also had partnered with Metrolinx for this condo so that they could build these towers right next to the GO station, and so they've been very defensive in regards to the things that are said about this project, as they don't want to ruin their relationship with Metrolinx. Vandyke currently has numerous liens amounting to $267 million placed against their projects because they aren't paying their workers. It seems Vandyke has just run out of money, but they don't want to have that realization yet, and so they just keep digging themselves a deeper hole. There are numerous contractors, subcontractors, and realtors who have publicly called out Vandyke for owing them hundreds of thousands of dollars individually and millions of dollars combined. Vandyke is even leaving their main architect out to dry. The ones suffering the most from this are, of course, the buyers. Buying a home requires you to put tens of thousands to even hundreds of thousands of dollars down as a deposit. That's a lot of money. Sending away anywhere from $50,000 to $200,000 or more in 2017 and not seeing anything from that money over 5 years later can put a lot of strain on people financially. Once you make that deposit, there's no getting that money back unless something extreme happens and it isn't covered in the documents you signed. But it most likely is, as armies of lawyers over decades have fine-tuned most of those agreements of purchase and sales to cover everything, including an unforeseen pandemic. People often buy into pre-construction projects without fully grasping the fine print. Take, for example, those who bought at Uptowns in 2017, expecting to move in within 3 years. Fast forward 6 years later, and they're still waiting understandably puzzled about the legality of these delays. This confusion happens because developers set multiple occupancy dates within the contract, with the furthest one being the outside occupancy date. If your unit isn't ready by this date, you then have the right to terminate the contract, reclaim your deposits, and in certain cases, even pursue legal action against the developer. The outside occupancy date can vary widely, often ranging from 5 to 10 years after the sales launch, depending on the project's scale and the developer's profile. Developers can also issue notices to extend this date beyond what was initially agreed upon. As for Uptowns and Brampton, I'm not sure if they've surpassed their outside occupancy date. The last I checked, it was set for May 2023. For the other projects, the buyers are stuck for now, as those projects just launched recently, and so there are many years left for the project to still be complete by whoever takes over. Currently, those projects haven't been worked on at all, as you can see in my videos of the development sites. Once the projects get taken over, as don't forget they're going into receivership, then there will hopefully be some progress and buyers can rest assured that their units will be complete in a timely manner. If you haven't seen my previous video about the one going into receivership, let me explain what receivership means. Essentially, it's a situation where a court appoints a special manager called a receiver to take over a company or a project that is in financial trouble. This step is usually taken when that entity, in this case Vandyke, can't pay their debts and needs someone to step in and manage things. In real estate, when a project like a condo or a townhouse development goes into receivership, the receiver then manages the property and tries to get it back on track. Their goal is to protect the interests of the people who have put money into the project, like investors and buyers, and also to pay back any debts to creditors as much as possible. Receivership indicates serious financial issues, and it leads to delays and uncertainties for everyone involved. In regards to the deposits, for the projects that are condominiums, the deposits are relatively protected because they're in a trust account as required by the Condominium Act. Tarion also protects and covers your deposit, but only up to $20,000, and most pre-construction deposits are 10 times that amount. That's where the developer's deposit insurance comes into play, and all developers must have deposit insurance as required under the Condominium Act. So, condo buyers can rest assured knowing that if things really derail, they will get their deposit back. Eventually. The situation with developers like Vandyke facing tough financial challenges and lengthy delays is reflective of the broader market trends in the GTA. Our real estate market has been under pressure recently due to the rising interest rates, increased construction costs, and supply chain disruptions. These factors have really tightened the margins for developers, making it more challenging than ever to complete projects on time and within budget. The changing dynamics of the housing market, with fluctuations in demand and pricing, have added to that challenge, as we've seen many buyers walk away from projects forfeiting their hundreds of thousands of dollars in deposits, because that is a loss they're willing to take rather than have to get a mortgage at these current interest rates. In addition to buyers not closing on projects, leading to a delay in funds for developers, the cooling of the market has also led to fewer pre-construction sales, which are crucial for funding development projects. This, combined with the rising costs and operational challenges, has pushed some developers to delay projects significantly, or in worse cases, file for bankruptcy or be put into situations like Vandyke. The situation that Vandyke is in is a striking example of the challenges currently faced in the real estate sector. For the buyers who have invested in these projects, they now just have to wait and see what happens as a receiver hopefully takes over the projects and they get completed in the near future. The buyers invested in condo projects can rest assured knowing their deposit money won't be lost, but at the same time have to remain unaware of how long that money will be sitting doing nothing. Overall, the situation with developers like Vandyke serves as a cautionary tale for investors and buyers. The need for due diligence and a careful assessment of the risks involved in pre-construction real estate investments is extremely necessary and often overlooked due to the emotion and motivations behind purchasing a property. The current market conditions call for increased caution and awareness from all stakeholders in the real estate industry, from developers to buyers, as we find ourselves in a time period marked by financial overleverage, instances of fraud, and other complex challenges. Do you think we'll see more high-profile developers suffer from the current market conditions? We've now seen Vandyke, Artscape by Daniels, and The One by Mizrahi Developments all have their projects face receivership in the last 4 months alone. Let me know your thoughts down below, and make sure to share this with your friends or anyone who's interested in real estate and the current economic conditions. My cell number, email, and website are all in the description below, so feel free to reach out with any questions you may have, especially in relation to the current market conditions and pre-construction risks. Thanks for watching.